Good morning and welcome to the ADS Securities Markets Update. Today we will start with oil prices, which soared sharply yesterday and also in the early morning hours today. Both West Texas and Brent crude soared by 10%, posting the biggest daily gains since March of 2009. Beginning with the chart, I shared this chart on our social media platforms yesterday, and this chart is the gold oil ratio with West Texas and S&P 500, and you can also compare it with Brent crude and West Texas or WTI or West Texas crude oil. But what this ratio infers is that when the current ratio is below 15.4, which is the historical average of this ratio, so then gold is either too cheap or oil is too expensive. At the same time, when the ratio is greater than 15.4, then oil is either too cheap or gold is too expensive. However, this doesn't matter with what happened yesterday because the ratio was around 27, and this means here that oil is either too cheap or gold is too expensive. But in order to understand that, let's look at the chart. By looking at the chart historically, this is the chart yesterday where it shows when since the beginning of the year until today, when we found it, or when this ratio finds a new or forms a new top, this basically leads to a rally in West Texas. Back in January, we've seen the top here, and West Texas rallied by $10. Also, S&P 500 rallied by more than 6%, and the same in March and April when the ratio couldn't also break out and then continue to lower again from almost a 22 to 18, and even we reached almost a 17. The West Texas also rallied by also $19, and even S&P 500 rallied by more than 3.5%. But as we look also historically, this chart is since 1983, and historically each time, again, as I said, when the ratio forms a new top, equities, and here just we're showing only West Texas. So in 1983, since from 35.20 until at least almost 10, the West Texas crude rallied from 14 to 40. We've seen also many patterns the same one. So yesterday it was almost the same scenario, which basically in the morning we've seen, before that, let's say, in the morning before, the West Texas was trading about 39.98 when we published this website, while the gold oil ratio was trading around at 25.30s, forming a potential double top on the daily chart, which looked like the same as the formation or as the pattern in January also. So zooming into that chart, which is basically the next one. Yeah, this is the top. This is the top of January, and this is when West Texas crude also bottomed there and then continued to rally toward or to rise again from its lows back toward $43 and up to $53 also, and continued that rally until May, reaching as high as $62.60. So yesterday's chart basically showed a potential double top, which is the same also in January, and also accelerated during the U.S. session after the U.S. GDP figures, which came in much better than expected, leading West Texas crude oil, Brent crude oil also to rise by more than 10%, while it's up also by more than 1.22% earlier this morning. And even also equities or the S&P 500 also increased by more than 2%. And this is, or if you're asking right now, is this the bottom in oil? We can't really rule it out yesterday, or at least for today, but we can say that signs of stabilization is starting to show up again. Going into some fundamentals again, the US GDP yesterday came in much better than expected, growing by more than 3.7% in Q2 of this year, while estimates were to grow by only 3.2% instead of the initial reading, which was 2.3%. The main reason behind the big increase in GDP was the private inventory, which increased by the most on record, which makes also Q3 GDP estimates lower than Q2 for the time being. The jobless claims also eased back lower toward 271,000, down from 277,000, while estimates were to decline toward 275,000. Depending home sales increased, unfortunately, way less than expected, rising by 0.45% in July after declining by 1.7%, while it had been anticipated to rise by 1.3%. However, the year-over-year slowed down sharply again toward 7.16, down from 11.12 for the same period, which also the lowest reading since January of this year. Finally, Kansas City Fed manufacturing activity index also unexpectedly declined back to -9 in August compared to -7 in July, while estimates were to come in at -4. In Asia, there were a few economic releases from Japan which had a notable impact on the markets and on the Japanese yen, and most of these figures were positive, including the unemployment rate, national core inflation, Tokyo core inflation, while the household spending unexpectedly declined by 0.2%, while estimates were to rise by 0.9%. As for today, there are many economic figures will be released during the European and the US session, but Starting with the European session, with the European session, we'll be looking for two events only. First of all, the UK's second GDP estimates, which will be released today, and which likely to remain stable at 0.7% or unrevised, while the business investment might be revised lower toward 1.6 instead of 2%. In the US, another series of economy figures will be released today, including the goods trade balance, core PCE price index, which is the most important today because it will show whether if there is any inflationary pressure in the US or any deflationary pressure at the same time. Personal spending, personal income, also the revised University of Michigan consumer sentiment, and finally the inflation expectations. Finally, we will have a look at the US dollar index technical chart. The index managed to rise yesterday sharply and regain above its 200-day moving average especially yesterday, rising to as high as 96.03. However, the rally stopped at 95.92, which basically it's here, and this is basically because of this is a solid resistance area. In addition, also to the 100-day moving average, which also stands at the same area 96.13, which should be watched very carefully today, as a break above that trend line may change the view to bullish again. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. This is it for the week. I'll see you again next week. Have a good weekend.